I have to make a decision to stay or to go back. And I decide to stay and fight it through and succeed. So that was in 1995. I came to Madison, Wisconsin. I consider myself to be very, very lucky to immigrate directly to Madison, Wisconsin, bypassing New York, bypassing Miami or California, because as I mentioned, Midwest people are so extremely friendly and they're helpful and they want you to succeed. That's really helped me. I don't know if I would be where I am right now without Madison, Wisconsin people. So, and I start very simple jobs. I clean dishes, I wait tables, I paint windows, I did all that. But I knew from the experience in Russia that real estate that's what I'm good at, selling. And I always believe you have to sell a bigger and better product to succeed and to earn and to develop your intelligence. So in 1999, that's when I was able to actually get my driver's license, because females were not allowed to drive a car back in the days.
In Russia?
And in Russia, yes, and my real estate license. So it was both in November of 1999. And I was employed by the real estate company, and that's how I started my career. In about 3 years, I became a top producer in the real estate industry. I moved to Green Bay, Wisconsin. I think I hit the being top producer when I sold 168 houses.
Okay, so you were in residential then?
Yes, I was in residential, yes. I became top producer. I created a system, I created a referral system, basically how to treat people very well after the closing, to receive the good feedback and to gain a good reputation. And going through recession and selling anywhere between 130 and 200 houses per year was giving me over and over a thought. If I believe that I have to sell better and bigger product, and then more education and more intelligence I have, then more money I will make. Not only more money, but also do something more complicated. That's how I started investigating about commercial real estate and commercial investing. I got involved with Mr. Lindell in 2007 or 8, somewhere there. I learned all about investing in multifamily products, storage units. I learned how to underwrite the deal. I learned how to participate in syndication. And that's what's bringing me to CCIM classes and to learning how to do the development. And that's made me to be curious about saving on taxes. I was in a position when I was literally paying between about $10,000–$12,000 per month in taxes. And I knew this is not what I want to be, because that was very, very, very painful for me to do. So that's where I take my attention and I start learning how to do the write-up, how to work with the depreciation, where to invest, residential house, commercial property, okay? So, and that's what I am right now, and I am learning more and more every day about that. So why invest in commercial real estate? Okay. So obviously this is probably very simple and maybe everybody knows, but I would like to still focus on that. There's 3 types of income, so to speak, that I observe, that I'm interested in. So there's a first one is very simple. The people who have a full-time job, they have no investments at all, and they have very, very minimum tax deduction. And in my opinion, and John, you can step in and correct me anytime, and Jesse, so is you. I think those people are paying the most taxes because they have very, very little deductions, okay? And I do believe it's a very hard shoes to wear. And I am here so I can reach out to those people and help them.
okay? Because like Warren Buffett said, we all wanted to be wealthy. I love United States of America, and I want everybody to be wealthy. And I'm going to give my time at any time to explain and sit down and help somebody. The second person is, it's a full-time job, but they have some investments, okay? Maybe they have residential houses or duplexes, something that's produced small income. So those people have some write-off, okay, but they still pay very high taxes. And then, of course, the third one that's IRS recognized as a full-time real estate professional, okay? And I'm one of them. I can write off pretty much everything I do, right? Because everything I do is related to the real estate. So all my expenses. And the next page, I'm going to demonstrate for you an examples how it works approximately. So we can see the first example. Let's say he's earning W-2 and 100,000, and he has very, very minimum write-off, and his taxable income is
63,000. And I look at that, and it is painful for me to see that number. And then a second,
where they have some real estate, they have some expenses they can write off, but still, the percentage that they're paying and the taxes that they're paying is very, very large, okay? Now, of course, people like myself, we own commercial real estate. We have a lot of things that we can write off. We're writing off our personal interest on a mortgage payment, if there is one. And of course, we are writing the commercial, all the loans. We do not buy for cash. We leverage the money, and we do like the write-offs. So that's the magic of leveraging the money. There is a more complicated, where you can invest more in many different IRA, and you can buy insurance, but that's completely different class. This is very, very simple. Just show it to people and try to convince people to start investing in commercial real estate, not in residential, okay? That's the whole purpose of this little meeting. So you can tell that's how much write-off actually the full-time real estate professional can have, and literally bringing the taxable income to zero. Here's your definition of the commercial real estate professional per IRS. I'm sorry, I keep stuck on this IRA. Spending about 700 hours of service during the tax year. And just a little statistics for you, how the federal system is an example, how they're collecting and how actually they allowed to write off to work in the commercial industry, in the business industry. An example of the Donald Trump, this whole conversations and politics about how he does not pay taxes. In reality, obviously, he does absolutely nothing illegal or unethical. He simply used the write-off. I have a major, over $1 million, for me it's a major loss during the recession, okay? I am actually just starting to pay some income taxes because I was carrying on and on and on the loss of that. And that's what basically he does. Why would we not learn how to do it? Because information is available. I mean, he's not actually creating the new laws in the IRS. And this information is available to all of us. We have to learn it, and we have to use it. And we have to learn how to keep our hard-earned money in our pocket and how to reinvest this money. That's all it is. I think the reason why people pay high taxes because they simply don't know how to use the tax law. My simple example that I really like to use, I have a LLC called Golden Goose. And when people are earning, let's say this $25,000, I explain them, this is your golden goose. Stop chipping away. Stop eating your golden goose. Take this money, invest somewhere, something that you understand. For example, I would not invest my money in stock just because I don't understand. My son does understand, but I understand real estate, right? So I can invest this $25,000 in real estate. In fact, I can invest in a commercial real estate. I can invest in $5 million commercial real estate with $25,000. I don't have to have $1 million to participate in purchasing commercial real estate, and actually to participate in using all those write-offs. It's also who you know and what you know, right? But first comes what you know. Because when you learn what you know, then you will find the people who will become your people who you know. So my Golden Goose Investments LLC, it's an image. It's all about to earn money, to save money, and to reinvest money safer. And I also teach my investors, because investors always say, what's the cash on cash? What is it return? I want 10%, I want 12%. And I said, no, the number one goal is in investing is not lose your money. And the rule number 2, don't forget about rule number 1, correct?
That's it.
So everything that I know about investing in commercial real estate, if the cash on cash producing anywhere between 7 to 8%, it should be safe. Absolutely leverage.
Okay.
Yes, yes. I believe only in leverage.
Okay.
Not leverage 90% loan to value, 78%, 65%.
Okay.
Yeah, yeah. That's, in my opinion, safe. Well, of course, all of us like non-recourse, right? All of us do. Not all of us can get. This is just the 5 tips that's I go by, and in a conversation with investors, I always tell them, listen, hire commercial real estate broker. When I was back in Miami and when I was watching, and even actually here, when residential brokers running around and try to sell to their friends commercial real estate and those friends actually trusting them, that's the biggest mistake. And then they also hiring a residential home inspector who's doing inspection in a commercial real estate and have no idea what's the laws and what's the property will be used for. So that's a mistake, could be in the cost in hundreds of thousands of dollars later on. Hire CPA who specialize in real estate, right? Not just CPA. And actually right nowadays, I know how to interview them, and I know what the questions to ask, and identify the one that's just the average CPA that will do my taxes and I will owe money again, right? Or the one who actually will do my taxes and maybe they will owe money to me. Get organized. Well, get organized is just helps simply for your financing, right? Because if you're using a QuickBooks, or if you know where the dollar goes and where they're coming, it's a lot easier to actually make sure that you're not paying or overpaying income taxes. And earn like a rich, meaning you don't have to. What I learned living in the United States, you don't have to necessarily work too hard. When I came here, I literally worked, without any exaggeration, 9 a.m. to 4 a.m. That was my work day, without any exaggeration. No English, no speaking English, zero knowledge, right? That's how people work. And then I got better, little better, and then I worked 9 a.m. to 9 p.m. But the more knowledge I was gaining, the less hours I was working. Not necessarily I don't work right now, I still work, but I work differently. I work by my computer, and I'm driving my luxury vehicle. That's completely different, okay? So when I say earn like a rich, there's a very simple book, I think it's called Millionaire Mind, where the book is Millionaire Mind, I believe. Does that sound familiar? When he literally teach you how to add a zero. Okay, like the conversation is, how do you think right now? And I was thinking, do you think by $1,000 about your financing? Do you think by $10,000? Or you think by $100,000? Or you think by $250,000, $500,000, by $1 million? How do you think? And what you think, that's what you become, right? So I really, when I was reading this book, I think it was maybe back during the recession, 2009, 2010, I really forced myself and I started thinking, okay, I have to think millions at the time. When I think, I think, okay, is it 3 million? Is it 5 million? Millions at the time. So the next step would be to start thinking 10 millions at a time about your financing. So when you think about the deal, you think, okay, how much is it going to be? How is it going to be 10 million or 20 million? Not the 3 million to 5 million. And the thinking, actually, this incredible book really made a difference in my mind, because I cut myself. How am I thinking? And when I'm communicating with other people, I also hear how they're thinking. And I try to correct that. I try to say, don't say that. Add a 0 to your thinking. Okay? That's actually how you become rich. Well, when I look residential real estate, and this is just my personal opinion going through the recession and living in the United States at the period of time that I did, I look at the residential as a high risk investment. That's how I look at it. Why? And I own a residential. I own a few residential back in Wisconsin. If I have a tenant and they're not paying me, I have to go through the vacancy, and I still have a mortgage and so forth, right? And the tenant is actually a family. They have jobs or they lost their jobs. They're going through divorce, or somebody gets sick, or the situation change. So the tenants in residential, they're moving quickly. I mean, in the apartments, they're moving maybe every 18 months, I believe the statistics. In a residential home, they're moving every 3 years. But there's not a lot of stability. Plus, residential, in my view, it's very much depending on the market and on your neighbors and what's going on, right? So in a commercial, it's completely different. Not completely different, I shouldn't say that. But let's say I invest in a medical office, and I have a group of doctors who signed a 10-year lease with another 5-year extension and 5-year extension, and there's a personal guarantee and so forth, right? So I know by the first of the month, and I have this experience personally, religiously, first of the month, they pay. There's no problems, okay? It's a triple net lease versus residential. When they call you and they say there's something going on with my toilet, and you're thinking, I did use it again, right? So commercial, no, there's no problems like that. They just pay. They just pay when they call you once per year. You don't even recognize who it is. Commercial also, there's a stable, like let's say 3% annual increase, right? So they pay me $100,000 this year. They're gonna pay me 3% higher, 3% higher. In commercial, I can actually project what I can sell for in 10 years, because I know what my income will be. And I can kind of project a little bit interest rates. Let's say I'm buying and I'm financing 5% interest rate. Okay, fine, I will say 7, because that's the average interest rate in the United States. So if I do this type of projection, I know what I'm gonna sell for, what my profit will be, what my tax gain will be, and so forth. It's more clear. And residential, I feel I'm in a dark room. It's not clear. Where the market will go, high or low, how the city will do. Is this employment moving in, employment moving out? Are we becoming like Detroit back in the days? Or are we becoming like Detroit right now? You know, so that's residential. Commercial, also the usage of the property. If I take an example, I am working right now with a gentleman. He is purchasing 12 units apartment building that's completely vacant in Venice, right? And he's telling me, he's from Ohio, and he's telling me, what should I do? Should I rehab? Should I get a tenant? And I'm doing all the calculations. And I said, why don't you connect with the disability organization and see, maybe create something more special use. Maybe they will pay. Find where the government will pay when your tenant's going to be there longer, right? So his income just became a lot higher. So in the commercial world, how you use the property can increase your income dramatically. You take, let's say, a hotel, inexpensive hotel, right? And you see that you can convert this hotel to assisted living facility. Your income changed, the use of the property changed, everything changed. You purchased this building for a $1 million. You did this transition, right? And now you are analyzing, and it's a $5 million. You cannot do that in residential. You can do it land development. That's a different story. It's more expensive.
Yeah.
And then in residential, and I had this experience myself, my tenant called me, older lady, and she said, I have cancer. What do I do now? I cannot, kick her out, right? So she lived there almost 2 years without paying any rent with her disabled son. And I paid mortgage. And finally, slowly, she moved out. I don't know what happened to her. But that's residential. It's people involved, more people, less business. Commercial is business. I can come to the judge, and even my commercial tenant doctor who has cancer is still going to be treated differently.
Yep.
You don't want to be the person who is value money more than a human being.
Yep.
Because after all, this is what it's all about. And a golden goose we discussed already. So what's next? The next event I am thinking, and actually John would be participating with me, and I will be very privileged of that. I'm very, very honored. John is specializing in understanding something that's called a cost segregation, right? That's very, very, very valuable piece for the next meeting. And please invite the friends. I'm encouraging you that who would like to learn about that. And we will do a good discussion, about 45 to 60 minutes on that. And when I learned that, it was another revolution with my financing. And love the commercial real estate, because I learned and I realized there is another step how to save your money that you earn. Okay, and the reason why we would actually discuss that with the public, because once again, we want to help people, right? We want to help people. We want to help people to earn money and to keep money and to continue doing that.